Hello and welcome to Business Today. I'm Siddharth Zarabi, and with me today a very special guest on this C-suite spotlight conversation, the recently appointed chairman of India's largest banking institution, the State Bank of India, Mr. C.S. Setty. He's been in the top job at SBI for over 4 months, but I must tell you, he's a SBI veteran, has spent over 3.5 decades in this bank. Very warm welcome to Business Today, Mr. Setty, and congratulations.
Thank you.
I know your first 4 months have been busy, and I want to therefore just start by getting you to tell our viewers about what kind of priorities have you been following after you hit the ground running as chairman.
Thank you, Siddharth, for having me on your show. Yes, I think it's... Though you have been a lifer in State Bank of India, 36 years you spent, but being a chairman of the largest institution in financial services is a great honor and also a greater responsibility. So it's a mix of continuity and change for me, in the sense that I've been part of this board for the last 4 years. Which means that many things what we collectively have been doing as management, some of these initiatives will continue in terms of digitalization, in terms of increased focus on the financial inclusion, and what we have done in terms of SME. That I think would continue to be pursued by me. But what additionally I would like to do essentially is that how do we build on our network? How do we build on the digital capabilities what we invested in and bring the consistency in our performance and increase the productivity of the both digital channels as well as branch channel, and more importantly create a resilience in our operations. These are broader themes, but there are a lot of sub-themes in it. So to get this idea of consistency, productivity and resilience across the bank, we have initiated, myself as well as 4 managing directors working with me, have undertaken the largest staff outreach program ever attempted in SBI. Physically, we are going to what is called zonal offices and meeting very critical components of our machinery, that is branch managers. 22,500 branches we have. We have more than 500 regional offices, more than 100 zonal offices, 17 local head offices. We are trying to meet everyone and convey the same theme on the consistency, productivity and resilience.
This almost sounds like a Padayatra. You are going to be on a campaign across
the... Except we are not going by foot. And I think this was important because I think many a time people ask me that the bank is in a good shape, is the highest profit-making bank in the country. In fact, highest profit-making company in the country. So what is that inflection point we are looking? What is next for us? In fact, we called this outreach program, in my view, appropriately as next leap. What is next leap for this bank?
Right.
So this outreach program is also aimed at getting the feedback from the ground that what else we need to do as a bank, both in terms of serving our customers better,
right,
and creating the value for our stakeholders, whether it is shareholders, employees, government, regulators. I think these are the common themes which we are talking to them and also getting the feedback from them.
It's quite interesting, Mr. Setty, that you're going down this path, if I may say that, because this conversation, and I must inform our viewers as well, comes after a very high-powered jury headed by former Minister of State for Finance, Mr. Sinha, and many others actually have selected and awarded the State Bank of India, India's Best Bank in Innovation Award. And I guess viewers would want to understand that if the award is for innovation, which means digitalization and newer ways of reaching the customer, you're also talking about expanding your physical reach, I believe, more branch expansion. How does this work together and what is the strategy behind strengthening the physical presence as well as the digital part of your business?
See, we have currently about 500 million customers and hugely diversified customers as a reflection of Indian diversity. We have, extremely wealthy, high net worth individual in our customer base, and also a zero balance account holder in fact, we normally start the journey with zero balance in many of the rural areas, just to bring them into the banking system. So this diversified customer base need to be served both physically and digitally. And our physical presence is unparalleled. We have around 22,500 branches today. But we also have done an extensive market study, micro market study. We found that there are certain gaps. The newly developed townships or new emerging colonies where everyone wants to have an SBI branch. So we are looking at a potential business opportunity in these areas and going for the physical branch network.
Why does this happen? Because, a common sense response to this would be that in a country which sees such high volumes of online payment transactions, does the Indian customer behave quite uniquely that he wants a physical presence, a connect, someone familiar behind the counter, as well as have access to online payments and digital technology for banking? How do both go together?
It is not restricted to the financial service alone. Interestingly, the completely digital native companies like Amazon, Flipkart, or many of these new age startups which have started their journey on the digital would also like to have physical presence, not only in India. We have seen that even today, the large mainstream banks which have completely gone digital in very big way in the developed countries like JP Morgan, Setty, are also expanding their physical footprint. I think it's a combination of, but what we want to do at the branches probably will change as we go forward. We need to reimagine the branch function. It may not be purely transaction oriented. Today, if you see in SBI, 97% of the transactions happen outside the branches. 97% of the transactions, which you mentioned, the high digitalization, whether it could be UPI, it could be, the app-based transaction, internet banking. So, but still even the 3 to 4% of the transaction volume for us of our size is still a good footfall happens in the branch, number one. Number two, we also want to use the branch network for quality value-added services to be delivered. Whether they can be still a platform for, wealth advisory, right? Wealth advisory, people still want to meet physically and see.
There's a trust element attached.
Trust element. Home loan is still physically sold. People want to come and find out, how do I create the document? What is the paperwork you need? So I think the physical and digital in India will coexist. And I think we are trying to ensure that, we don't miss out on that.
The chairman of one of India's largest private sector banks recently told me that technology is the new arms race when it comes to banking and financial services. Do you agree with this? And when it comes to technology, what are you doing to enhance the play? You already have a app, YONO, and many other plans. What's the technology focus that you have?
I think technology is going to be central to everybody's agenda, not necessarily the banks. Banks, I think, adopted technology much earlier than many other industries. If you see the core bank itself is almost 25 to 30 years old, which means that today banking is heavily technology oriented. The payment services completely moved to digital and technology. So which means every financial services institution is not only spending on technology, trying to arrive at what is the right technology to use. So in SBI, we have been one of the pioneers in terms of technology adoption, both on the branch banking as well as on the digital banking. What is the next step in this technology? I think the 3 points which I mentioned right in the beginning about the resilience. It is important that while we create the digital channels or alternate channels, the availability of the channel is very important.
24/7.
24/7. And customers probably will visit branch once in a week, but people visit digital channel 10 times in a day.
Absolutely.
Correct. So which means that we need to create that resilience in our digital channel. This is what we are extremely focusing. You mentioned YONO. YONO 2.0 is all about how do we increase the capability of this application to handle the volumes, growing volumes. Today, if you take away the financial inclusion customers, the Jan Dhan accounts, zero balance, which are not truly zero balance today, we have around 30 crore plus customers who are non-financial inclusion customers. But we have just about 8 crore customers on our YONO app. So we want to bring as many people as possible, both from the financial inclusion side as well as non-financial inclusion customers to come on the app, because
Why has the gap remained, Mr. Setty?
no, that's what I think. The adoption, while we talk about a lot of adoption in the financial services, the payments are picked up, but other
Not the
financial
rest.
services still, I think, it's in the process. We want to bring as many people as possible on this, which means that your capability of this digital channel has to be strengthened to handle the volumes. My assumption is, in next 3 to 4 years, it will grow 3.5 to 4x in terms of the traffic. So which means that we are investing in back-end technology, how we provide the resilience to the digital channels. So the availability will be ensured, and the simplification of journeys will be done both for the customers as well as our own employees, so that they can serve the customer better.
Before I move on to other matters, since you spoke about YONO 2.0, I'm just wondering, and in your entire career, you've had exposure to multiple aspects of banking, including technology. But what kind of size and shape do you see YONO 2.0 having, maybe 5 years or 3 years subsequently? Because when we talk to other people in this space, they even talk about a different evaluation and a metric for the app platform. Some others believe that app platforms can become omnibus and have other services also being retailed through it. What's therefore the long-term shape that YONO 2.0 will have eventually?
Yeah. YONO 1.0 itself was revolutionary when we launched it. You mentioned something about value-added services. It's not a pure banking app. Today, we sell many of the non-banking products also on the insurance, mutual funds, credit cards, through that. And we have created additionally a marketplace. Somebody wants to buy something on Amazon. We are asking them to list in our app. So it's a combination of marketplace, banking, and non-banking financial services. It was a revolutionary when it was launched, but a lot of people have caught up on that. So the next step, what we are trying to do in YONO 2.0 is, it was essentially a mobile offering. The technology what we have developed is customer journeys which were revisited were essentially to make it available on the mobile. And mobile is going to be a powerful device. I think this future of banking is all about how effectively you use the mobile platform.
Absolutely.
But we also have a large platform in terms of branch channel. We have a large platform in terms of internet banking, who are still people use desktop banking, right? And we have large number of feet on street, people who actually source applications for us. So we are trying to do in YONO 2.0 is not only about mobile application, we are reimagining our branch journeys, how feet on street will work, how contact center will work, and more importantly, how internet banking works with a common code. That means, if you start journey with the branch and you have some work to go to office, and you want to complete the rest of the journey on the mobile, you can start where you have left off. Today it's not possible because they're all silos.
Mr. Setty, I want to begin by asking you that, in your position as the head of the country's largest banking institution, what's your assessment of the credit markets and attached to that the investment appetite of corporate India, which has been a matter of debate for the past 3-4 years?
I think we have witnessed a good credit growth post-COVID. It is also because I think there was a pent-up demand. It is also a fact that much of that credit growth also had come from the retail personal credit growth, whether it could be unsecured personal loans or home loans. Home loan is a very important category of growth. What we witnessed, are witnessing also, is that two important segments are growing, MSME and agriculture. We have witnessed almost 16 to 17% credit growth rate in these two sectors. It is also possible that while the demand was always there, the ability of the banks to look at these customers from a different lens, because digital data is available, ecosystem provides many enablers like bureau data, GST data, our own account data, which we are able to combine and assess these customers in a better manner today.
That's a very
So this
important
is
point.
a very important point which we have to realize. So on the corporate credit, I think corporate credit for the last 3-4 years has been stagnating. It's not that it was doing phenomenally well and has come down. But private investment obviously is happening only in certain sectors. The core sectors like steel and cement, despite having the capacity utilization of 70 to 75%, we are not witnessing the new investments coming in this core sector. I think it's more to do with the external markets. They're not very sure how the export markets are going to behave. A lot of the steel capacity was consumed in the last 2-3 years for the exports. But today export markets are not all that attractive. So I think they're all waiting how the external environment is going to play out with all the geopolitical concerns, and they're just waiting for the investments to roll out. In my view, 70 to 75% capacity utilization generally triggers the capital expenditure movement, because they have to add the new capacity there. That's been stagnant almost for 2 years at that level, 75%, and I think they're essentially looking at how the external sector is going to play out.
What do you think, in your view, needs to be done to help revive demand and which will lead to creation of fresh investment?
I think all the enablers are in place in terms of the infrastructure, in terms of the taxation. Of course, corporate tax itself was brought down. What is important for the private investment to kick in is in terms of the demand, as you mentioned. My view is that we've been, of course, talking to the government also, that till the private investment kicks in, the heavy lifting has to be done by the government of India. I think heavy lifting was being done, and we wanted them to continue for some more time till the demand picks up in the environment. With a couple of other reasons also. If you see, the first 2 quarters we have had one quarter elections, another quarter heavy rains in the system. We may or may not really feel the effect directly, but they definitely slowed down the investment, particularly on the government side, both on the center as well as state governments. And this Q3, Q4 onwards, probably the government expenditure will accelerate and creating the demand in the rural and urban areas. Rural, we are confident that rural will do better because the heavy rains in Kharif had added to the reservoir levels. There's a good crop, Rabi crop is going to be there, and good rural demand will have a significant effect on the overall consumption pattern.
Mr. Setty, there's also been a flight of capital to the stock markets, and the reason I ask you this is it means that deposits have been lagging credit. How do you view this scenario? Do you see that kind of having stabilized? Because a few quarters ago it was a bigger issue in some ways than it seems to be now.
Yeah, the latest numbers indicate that I think deposits growth has overtaken the credit growth, which means that the equilibrium is being achieved now. It will stabilize around 11 to 12%, both on the deposits and advances side. As far as savers to investors, I think it's a debate which has been there actively in the various fora. It is inevitable in my view, in the sense that as the economy matures and investment opportunities are seen, and more importantly, ease of doing investments also.
Yes, on the phone, the point that you made about the mobile phone.
It's not only about investment in equity market. I keep saying, today the flight of money from the savings account to fixed deposit is also there. It is so easy to move the money from a savings bank account to a fixed deposit account. So ease of doing investment and investment awareness. Obviously, the mutual funds also have contributed in terms of creating this investment culture. But eventually, as they progress, there will be a better asset allocation, which means that, the deposits continue to be a critical component of investment basket. I think all investment advisors definitely tell everyone that you can't put everything in the equities.
You have to have a basket.
You have to have an allocation. And deposits will continue to be an important part in the investment basket of any individual.
What's your own view about you referred to that point about in some ways trying to ensure that fixed deposits are incentivized, perhaps from a tax treatment point of view? What would you say to that?
So obviously, if you ask me as a banker, I would say that, there should be
I'm India's largest banker, not just
equal treatment for all savings instruments. But I think more importantly, many of the investments which happen and the deposits have characteristically different nature, right? So one thing is that at least to encourage people to save long term. Maybe, they can give some benefits to the long-term deposits. Today, I think 5 years is the minimum period to get a tax benefit. So if that period can be reduced to 3 years, there will be good amount of savings. But I don't know whether tax alone will make anybody to come in here. Because see, a lot of people are also moving to other alternative investments for return purpose. It's not only taxation purpose, right? And the returns, we will never be able to match a savings instrument, a mutual fund instrument or an equity instrument. But what we can provide to the people is the safety, liquidity, and the stability of their investments. I think the characteristics of the investments is something what we want to project in a bigger manner.
Mr. Setty, this is absolutely sort of a relevant point because as you made that point, as the economy matures, a certain section, including first-timers who are entering the job market, their risk-taking ability or risk appetite is far higher than maybe now what it was 10, 15, 20 years ago. I want to take that point on the retail side a little further. What's your take on the broader retail credit story? Because there's also been stress when it comes to unsecured credit. That also has, invited the regulator's attention in a significant way. What's your view on this?
As I mentioned earlier, I think post-COVID retail credit growth has been significant. Even before before COVID, the post-NPA cycle in the corporate credit, I think most of the lenders consciously moved to the retail. Which means that the retail credit growth rates have been more than what the system anticipated. This growth, retail credit, the broader terms have 3-4 components. You have home loans is the biggest component of retail credit. A lot of people think that the retail credit means only the personal, unsecured personal loans. The good news is that in the overall system, the retail unsecured personal loan constitutes just about 10%. And if you take only retail credit, it's just about 1/3 of that. It's predominantly the home loans which
create good assets, capital assets.
And also, a lot of these buyers, home loan customers, are first-time home buyers.
And you are one of the strongest players.
We are the largest player. We are the largest player. In our books, 95% of the borrowers are first-time home buyers. So we are creating that enabler for them to buy a home of their own.
And you also have the lowest delinquency rate when it comes to
home loans, but in general have a lowest delinquency. Of course, ours is historically low delinquencies there. No, what I'm trying to say is that yes, the growth rate of unsecured personal loan has been a matter of concern, both for the regulators as well as for the lenders. So obviously, regulator has said that, there should be a better underwriting, number one. Number two, if you're taking a little risk, more risk on the unsecured personal loan, you please allocate a higher capital. So increased risk weights also have come. But I see that, that unsecured personal loan is moderating now. But the important segment in the retail credit, that is home loans, is growing very well.
And that has second round, third round impact on the economy. As we wind down this conversation, I just want a couple of quick points. One is about growth. We've seen overall GDP growth falling to the 7-quarter low, and the reason also is quite relevant. But how do you yourself see the growth impetus in the economy across sectors? Because in your place you have access to a lot of ground level feedback. What do you see happening as far as growth is concerned?
I think growth of India should be seen in the global context. In fact, if you see the IMF estimate for the global growth rate is about 3.2%. Whereas we've been expecting around 7% growth rate for India. In the last 2 quarters have definitely impacted slowed down the growth. But 1 quarter decline, I think we should not be really worried about. This country and economy has got a greater potential. Looking at, if we consider as proxy to the Indian economy, we see that there's a good growth potential. Our estimate is, I think, around growth rate of 6.5% is still a possible scenario what we are looking at for the full year, which is not a bad situation for us. This growth is also driven by, the consumption which is expected to come from the rural areas, and the government expenditure which I spoke about probably spur the demand further. So 6.5%, and if externalities play out in terms of, the protectionism, what is going to come out or something, maybe 20-30%.
Yeah, you're absolutely right. It's going to be an important January, the first month of the year. We have a once in 4 year change of guard in the United States, and we'll have our budget also, which will. What do you think? Cost of capital is also a crucial element when it comes to growth. We haven't seen cost of capital go down really. Is it time to consider that as well for the mandarins of the MPC?
I think this demand for rate cut has been there for quite some time. I think, but I think RBI and MPC definitely are weighing the inflationary situation, particularly on the food inflation side. Once it slightly moderates, I think they will be able to take a call on that.
Absolutely, and the US Fed commentary has also, most recent one had one. One final point. How has life been for you since you have moved into the corner office? Because this interview is called the C-Suite Spotlight, and you are in the corner office at SBI. How has life been for you ever since you moved in?
So it's very enriching experience. In fact, this is, as I said initially, it's more than the responsibility. I think the diversity of areas which we look at, and considering that this bank touches everybody's life in India, directly or indirectly, every day is a new day in terms of the life of SBI chairman. That's what I believe. And it's been good, challenging, but extremely enriching.
I believe it must be very challenging, because you are perhaps the definition of what is a full-service bank in one of the largest economies of the world, and a growing and aspirational economy. Mr. Setty, thank you very much for your time with us today. With that, it's a wrap on this conversation, exclusive interview, and the thoughts that Mr. C.S. Setty, the chairman of the State Bank of India, has shared with us. If you've been, thank you very much for watching. We'll be back. Until then, goodbye.